Hello, so we will have discussion about corporation and its definition, nature, and formation. First, what is corporation? Corporation is defined as an artificial being created by a operation of law having the right to succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. So it means it is an artificial being. It is not a human being. No, it is artificial being. For example, the Jollibee. If the Jollibee is being sued for something, it is not the directors or the owners of Jollibee that are being sued, but it is the Jollibee lang na corporation as an artificial being. The Jollibee will be sued, the Jollibee will pay for damages and everything else. Okay, what are the characteristics of a corporation? First is separate legal entity. This means that a corporation as an artificial person has a legal personality separate and distinct from its shareholders. As such, under its own corporate name, it may take hold or dispose property under its corporate capacity. It may enter into contract, can sue, and can be sued to court as As a creation of law, it cannot be established by a mere agreement of parties like in the case of partnership. For them to come into existence, authority has to be granted by the state. Okay, second characteristics, we have transferable unit of ownership. So the ownership of a corporation are divided into shares, no? Which can be transferred from one person to another without the consent of other shareholders. The ownership of a corporation is through its shares. Third characteristic, we have limited liability of shareholders. This means that the shareholders are liable only unto the extent of their capital contributions. The creditors of the corporation cannot run after the personal properties of the shareholders in satisfaction of their claims. So this is one of the advantages of a corporation, because if ever there are creditors and the creditors cannot run after the personal assets of the shareholders, only up to the extent of the assets of the corporation. So that is an advantage. Another, we have continuity of existence. That means that a corporation has the capacity for continued existence. But its life may not exceed 50 years, but the articles of incorporation may be subsequently amended to not more than 50 additional years at a time. This explains why there are corporations that exist more than 100 years. So it has a right of succession in which it will first exist for 50 years and then renewable ang articles of incorporation. If it reach 50 years, then for the end of the 50 years, they will renew the articles, and then it will be extended to another 50 years until forever. Next, the governing body. So what is the governing body of the corporation? It's called the BOD, the Board of Directors. The Board of Directors will formulate the policies of the corporation. The corporation law provides that the number of Board of Directors be not less than 5 but not more than 15. So 5 to 15 siya po ang Board of Directors. Classification of corporation. First is as to purpose. We have public corporation. It's one that is formed or organized to govern a portion of the state. Examples, in public corporation, we have barangays, municipalities, cities, and provinces. Next, we have private corporation. Is one that is formed for some private purpose, benefit, aim, or end. The one you see in San Miguel Corporation, they're private corporation man. Jollibee Corporation, something like that. And quasi-public corporation is a private corporation which is given a franchise to perform public duties, but is organized for profits like bus and airlines, light and power, telephone companies, etc. Next is as the law of creation. First, we have domestic corporation. It is organized under the Philippine laws. So foreign corporation is one that is organized under law other than the Philippines. Okay, that's no-brainer. Next, we have as to membership holdings. And then we say stock corporation is a private corporation organized for profit. Its capital is divided into share of stock. Yan lang. And we say non-stock, not for profit. If by incident it generates profits, such profits should be spent to continue attaining the objectives of its creation. Examples in non-stock, we have civic, religious, social, charitable institution, etc. Next, classification, we have as to admission of shareholders. Open corporation. Open corporation means that any person is welcome to become a shareholder. But when we say closely held corporation, from the root word itself, closely, it is one which the ownership is limited lang to selected persons or members of the family. Any corporation may be incorporated as closed corporation except mining or oil companies, stock exchanges, banks, insurance companies, public utilities, educational institution, corporation declared invested with public interest. So any corporation that has that is vested with public interest, it cannot be closely held corporation. No? Components of a corporation. What are these? First, we have the corporators. Are those who compose the corporation. Could be shareholders or members. Hence, corporators include incorporators, shareholders or members. So shareholders are the term we use for stock corporation, and we will use the term members for a non-stock corporation. Next, incorporators. These are the original persons who formed the corporation. They executed and signed the articles of incorporation. They must be natural persons as distinguished from artificial persons. So, it cannot be na ang incorporator is a corporation. Diba? It's not an artificial being. Dapat natural person siya. Another component, we have shareholders, are owners of stock in a corporation. Shareholders may be natural persons or artificial persons. So, pwede ang shareholder can be a corporation, can be pwede a shareholders of a corporation is another corporation, something like that na. Corporation being an artificial person is allowed by law to acquire shares of another corporation. Next, we have members. They are corporators, but it's non-stock corporation. I have mentioned it a while ago. Next, we have promoters. They are the one who undertake to form a group of persons interested in organizing a corporation. They procure subscriptions or capital for the corporation. Next, we have, this is kulang, Board of Directors, aka BOD. They are the governing bodies. So, in any question, like a question, what is the governing body of a corporation? It's called BOD. Nothing else. Form out of a governing body formed out of the shareholders. This acts as the policy-making body of the corporation. This is composed of not less than 5 but not more than 11 shareholders or members duly elected from among themselves. This is headed by the chairman of the board, who is considered to be the most powerful and influential person in the corporation. Next, we have the subscribers. They are the natural or artificial persons who have agreed to buy original and unissued stocks of the corporation. Upon full payment of its subscription, share certificates are issued to them, thus they become shareholders. So, who may form a corporation? It should be natural persons. Now, the incorporators should be natural persons. 5 to 15, but there is a law no recently nga. It could be a one-man corporation na lang, but I forgot what it is, but generally it's 5 to 15. And these persons should be in their legal age. What is the legal age of the Philippines? 18 and above. Then majority are residents of the Philippines. Incorporators must own at least one share capital. Okay. So how to form a corporation? So this is the stage. The first stage is organization stage. This is the stage where persons who do the preliminary arrangements made by the incorporators will come in. They will set up a tentative working organization and procure subscriptions and capital for the corporation. These persons are referred to as promoters. The second stage, we have incorporation stage. The Corporation Code of the Philippines provides that the Security and Exchange Commission, or SEC, shall not accept registration of articles of incorporation of any share corporation unless notarized and accompanied by the affidavit executed by the corporate treasurer that at least 25%. So this is the 25 rule, okay? Dapat at least 25% of the authorized share capital has been subscribed. Same subscribe, the subscribers, and at least 25% of the total subscription has been fully paid in actual cash and or property, the fair valuation of which is equal to at least 25% of said subscription. In no case shall the paid up by capital be less than 5,000. This is the pre-incorporation requirement. So once the pre-incorporation requirements, that means the 25% rule, are already complied with and after paying the required incorporation fees, the SEC will now approve the articles of incorporation and issue the certificate of incorporation. This is the birth of a corporation. On this date, the corporation acquires its own juridical personality. So, if the question is when will the corporation acquire its juridical personality, you will answer that it is when the SEC will approve the articles of incorporation and issue their certificate of incorporation. So, third stage, we have commencement stage. During its first organizational meeting, the shareholders formulate and adapt the bylaws of the corporation. The next stage is we have commencement stage. The corporation should start with its regular business activities within 2 years from the date of incorporation. If it does not, its corporate powers will cease and the corporation shall be deemed dissolved. However, if the corporation has started now operating already but subsequently it failed to operate for a period of at least 5 years, it could also be a valid ground for suspension or revocation of its certificate of incorporation. So what are the articles of incorporation? This is like the document when I will give it to the SEC for the approval of your corporation. And it contains name, your corporation, your purpose, location of your business, term, kailangan term, 50 years, or you want to names, nationalities, and residence of incorporators, directors, authorized share capital, the number of shares per value, and the par value per share. In case of no par value, could be any amount, not less than 5 pesos. And bylaws, what is bylaws? Bylaws are the rules and regulations adopted by the corporation administering its internal environment. So, like, this is the laws that will govern the environment of your corporation. And it contains the time, place, manner of calling and conducting a meeting. So, you will learn more of this in detail on your business law soon. So, kaning time, place, and manner of calling a meeting, it is all written in the bylaws. The matter of voting and use of proxies, the manner of electing the board of directors, qualifications, duties, and compensation of directors, trustees, officers, and employees, procedure of amendments. If you want to amend your articles of corporation or you want to amend your bylaws, requirements on for you to amend them will be written in the bylaws. Organization cost. This is more of the cost that you incurred before starting a corporation. First, we have promoters meeting, like the expenses of your promoter if he is into recruiting prospective incorporators. Attorney's fees, right, for your notarization or other consultation for the legal matters of your corporation. Then filing and publication fees, filing to SEC, BIR, cost of printing, stock and share certificates, And the ownership in a stock corporation is presented by its share capital, which is divided into units called shares. A shareholder's ownership in the corporation is determined by the number of shares he owns. And this ownership is evidenced by a document, and that document is called share or stock certificate. This certificate can only be issued to the individual shareholders who have fully paid its subscription. Next, we have stock and transfer book, corporate seal, counting, and legal fees. Next, we have rights of shareholders. First is to vote and attend annual shareholders meeting. To have a share in distribution of corporate profit, mostly dividends out of earnings. To share in distribution of assets upon corporate liquidation. To purchase additional share or the preemptive right. We say preemptive right. This is the right of a shareholder to be given priority to acquire additional shares. Why is that? This is to maintain the percentage ownership of the shareholders, because if ever the corporation will issue additional shares, and there are a lot of shareholders to the point that one shareholder will own a bigger percent, and it could be that the corporation will experience a takeover because a big percentage of ownership belong to other shareholders. So to maintain or to protect the ownership of the first shareholders, you will have this preemptive right. Next, legal capital. This is the position of paid-in capital arising from issuance of share capital. In case of par value shares, it is the aggregate par value shares of all issued and subscribed shares. In case of no par value shares, the total consideration received. Trust fund doctrine. This prohibits distribution of legal capital for protection of corporate creditors. Mostly, this trust fund doctrine is only distributed if the corporation is undergoing liquidation. Because again, if ever the corporation will go bankruptcy, this trust fund doctrine will be used to pay the creditors. Next, components of shareholders' equity. We have first the share capital. Share capital has a lot of connotations. It could be authorized share capital, which refers to the maximum amount of fixed by the corporate charter of articles of incorporation to be subscribed and paid in by the shareholders. Issued share capital. This represents the amount of shares which have been fully paid and the share certificates that have been issued. And also say unissued share capital. This represents that part of a corporation authorized share capital for which share stock certificates have not yet been issued but are available for issuance in the future. So, outstanding share capital, this refers to the issued share capital and still on the hands of the shareholders. So, another, we have subscribed share capital. This represents the amount of shares which have been subscribed but not yet fully paid. Another component is share premium or additional paid in. This represents the paid-in capital in excess of the par value or stated value, excess of the sales proceeds or treasury stock over cost-dated capital, and other premiums in relation to the retirement of shares. Next component, we have revaluation surplus or reserve. This is the excess. Next is revaluation surplus or reserve. This is the excess of value of plant assets as a result of appraisal over net book value. This account represents the cumulative income and expense from the start it operates up to the present. This account has been increased or decreased due to results of periodic income or loss, prior period adjustments known as fundamental errors, dividend distribution, changes in accounting policies, etc. This refers to the undistributed balance of accumulated profits and losses. And lastly, we have treasury shares. This represents a corporation's own share capital which has been issued but later reacquired not for the purpose of cancellation or retirement. This share is issued but not outstanding. So that's all for the corporation topic. I hope you learn one or two, and good luck to your qualifying examination, Freshies. Bye.